Okay, so this is going to be a blog covering the trades from the 1st of May all the way through the 9th of June for 2017. So far, the swing trader year to date for 2017 is up about 64% per 15K traded, and the Crusher's up about 26% per 30K traded. Just remember that trading futures options involves substantial risk of loss. It's not appropriate for all investors, and past performance is not indicative of future performance. So we've had a really great May, and then so far June is looking okay. The both of our packages have done really well since the last blog that I did, and I'm going to be reviewing all the trades. But before I get into that, let me just go over the disclaimer. Feel free to pause the screen and read through the disclaimer in more detail, but just wanted to mention that we are not a commodity trading advisor. We're what's called a third-party trading system developer, and we do offer algorithms that trade the futures market. The past performance is not indicative of future performance, and as always, trading futures, it does involve substantial risk of loss. It's not appropriate for everyone. The majority of the data I'll be talking about in this blog, though, is going to be the kind of the walk-forward trades that we've seen in the last about 5 weeks. And so the fills that I show are the actual fills that we got on the brokerage accounts. But just keep in mind that again, we do not control the accounts. People do trade them with the auto execution brokers, but everybody has their own account. It's not a consolidated account that everybody shares. So I think that covers the disclaimers pretty well, but let me go on and let's talk about how we've done the last 5 weeks or so. This is a breakdown of how each package is done since the start of the year. And so you'll see that the Crusher, which trades on $30,000 increments, is up about 7,898, which is about 26%. January was okay. February was really good. March really good. April was amazing. May we ended up doing really well, and then June, so far that package is down about $22, so it's pretty much flat for June. Although that does not include the open trade equity that we have, which is positive right now on the 10-year note trade. The swing trader, though, is done quite a bit better on a percent basis, but you'll notice the dollar amount is very similar to what the Crusher has done. The reason why it's done better on a percent basis, though, is because it trades in $15,000 increments. And it's mainly because it trades fewer algorithms, and those of you that have watched the videos have heard me talk about that quite a bit. But the swing trader trades 2 algorithms, the momentum ES and the Treasury 10-year note. The Crusher trades 7 algorithms, so it requires more per unit traded. It's a little bit more balanced, but this year for sure the swing trader has done quite a bit better. So for January, the swing trader was up about 1,000. February was really good on the swing trader. March had a small loss. April was pretty good. May we ended up closing up almost 10%. And then June, so far, we're up about 792, which is about 5%. So we're off to a great start in June on the swing trader. But overall, the algorithms have done really well. We've had, if you don't include June, since it's not over yet, the Crusher's actually been profitable every month. The swing trader has been up 4 months and only down 1 month, and so far it's looking like June might be pretty good. So and again, this June figures do not include the open trade equity, which I believe is about another $300 right now on the 10-year note. But this is the closed trades that we've seen. So with that, let me kind of go into the breakdown of how each package is done and cover some of the trades that we've seen. So the swing trader, and again, this data is for the entire year to date. If you want to see since it's gone live, feel free to email us and we can provide that data. It's also on the website, but just to keep things a little bit cleaner, we're just showing the 2017 results so that people can see kind of how we've done for the year. But as mentioned before, we're up about 64%. There's been 43 trades on the swing trader. 81% have been profitable, and our biggest drawdown we've seen so far in 2017 has been about $1,900. And again, that's for 2017. So refer to the website to see the max drawdown since going live, and also the back-tested max drawdown. But here's the equity curve. It's been doing really well. And there's, I guess, not a lot to comment on this. You can see there's been a couple losses that we've had. I think the last blog that I did, we ended somewhere around trade number 29, somewhere in here. So we had a few other good trades, and we took some losses, and we had one really good trade that bumped us back up, and then we've been going higher pretty much since then. Here's a list of all the trades, though, and now I'll kind of look at the actual charts, and we'll talk about some of the trades that we saw. So this chart right here is one of the algorithms that the swing trader trades. This is called the Momentum ES algorithm, and the last blog I did was back in here, so it's been a month plus a couple weeks, I guess. But you'll see that we had a winning trade right here, and again, this is a chart of the S&P 500, the E-minis, and this is my TradeStation account, which is where I do the development for these algorithms. But it shows kind of when we get in and when we get out, and the little blue dotted line means that there was a winning trade, and a red dotted line like this one here is a losing trade. But let me kind of walk through the trades that we saw. So beginning in May, we exited the trade that we were in. That probably when I left off on the blog, you probably saw that we were in this trade. So we got out when it hit its target, got in again, hit another target a few days later, got out again, or got in again on the 5th of May, and it ended up hitting its target the same within about an hour. So this algorithm enters about 5 minutes before the equity market closes, but then it trades for another hour until the futures market kind of cease for their quote-unquote day. So there's about an hour there that it can get out, and it did on that day. Jumped right back in on the 8th, another winning trade, another winning trade. So we had about 5 winning trades in a row before we got stopped out of a trade right here. And then we had another winner, then we got stopped out again. This was on the 17th of May. I believe some news came out related to Trump that caused this big gap down and then a pretty big sell-off. Well, we ended up getting stopped out at the open, so the algorithm did the right thing. If we would have held on to this, it would have taken further losses. But we got stopped out, and then look right here what happened. So we jumped back in that same day. We ended up holding for 5 days, and then got out up here. So this trade right here was huge. It was a really big winning trade. And we really, in the course of any given period, we'll have a lot of these little winners followed by a loser. But these really big winners like this one here are really kind of demonstrate how well this algorithm does. Because what you'll see is that on some of these trades, the target's pretty low. Right here is really just a 4-point target on the S&P. Well, if we would have gotten out on a 4-point target, we would have gotten out way down here and missed this entire run. So this algorithm has some trade logic in it that is really good at detecting when the move higher might be a more sustained move, and it really just could not have done this one better. I mean, sure, if we would have held on a little bit longer, it would have been nice. But what you'll see is that we got out, we get back in, we got out again, got back in, out again, and again out. So we've had a whole bunch of winning trades in a row since then. So we had this big winner where we get the majority of that up move, and then we have a few smaller winning trades as the market keeps going higher. And so we haven't had a losing trade on this algorithm since the 17th of May. All right, and so as of right now, we're in the S&P minis right here on this momentum algorithm, and I guess we'll see what happens. But but this algorithm is the one that does well when the S&P is going higher. And again, it's traded. It's one of the algorithms traded in the swing trader package, and it's also one of the algorithms in the S&P Crusher. The other algorithm that's traded in the swing trader is this one here. It's the Treasury note. And so what you're looking at is the futures for the 10-year note. And we, as of the last blog, which would have been back right in here, we were in this 10-year note trade and it was down a little bit. Well, the 10-year sold off for about a week, and then it started rallying again when some of that negative news came out about Trump. And we ended up rolling the futures over because of expiration, so we ended up taking about a $300 profit, but then we jump right back in. So we're still in this trade, and it's actually still up right now. So far it's a winning trade. But the purpose of this treasury note algorithm, though, is that if the S&P goes lower, then there's a high chance that the 10-year will go higher. In other words, they have a negative inverse correlation, and so what we do is we might be long the S&P for the rallies where the market's going higher, but then we also at times will be long the 10-year, and the reason why we do that is to take advantage of down moves. So if the S&P goes lower, more than likely the 10-year will go higher, and so that's kind of how we protect against the downside, and also take advantage of kind of bear market conditions. But that's the 10-year note. It's still in that trade, and those two algorithms are what make up the swing trader. And so let me go back to this. So this is a trade list now, and of the swing trader, and again it's up about, since the last blog, about $2,400. So in the last 5-6 weeks, that's how much it's up. It's about 8%. And actually that's wrong. It's more than 8% because that's 2,400. So it's I believe it's up about 16%. I think it's double that. But so again, this algorithm trades on $15,000 increments, and so it's up $2,437 per 15K traded. And here's all the trades. So you'll see all these kind of smaller gains on the S&P. Here's that big one. There was about a $2,000 gain that we saw, and then followed by some smaller ones. This 10-year note trade is the rollover, where we got out and took a profit of 330, but then we got back in. So with that, let me talk about the Crusher now. All right, so the Crusher, here's a kind of similar data, very close to how we just outlaid the swing trader. But this package trades 7 algorithms, so it trades the 2 that we just talked about, the swing trade ES, the 10-year note, and then it also does covered calls, iron condor, the gap short day trade, the day trade long, and the day trade short. So it basically adds 2 options algorithms and 3 day trade algorithms. And it's up about 7,800 for the year per 30K traded, which is about 26%. It's had 129 trades, 72% have been profitable, and the biggest drawdown has been about $3,200 since or for the year. Here's the equity curve, and you can see it had kind of a slow start to the year, but then kind of, I think it was early February, it really just took off and hasn't really looked back since then. But let me talk about the trades for this one. So let's go here. So we already talked about the momentum ES. That's in the swing trader and also the Crusher. We talked about the 10-year, also in the swing trader and also in the Crusher. The other algorithms are the iron condor, and then the covered calls and the day trades. But let's look at the iron condor real quick, and I'll kind of show you the trades it's seen since the last blog. There we go. Okay, so the last blog would have been back in here, and the options that and so with the iron condor, what we want is for the market to expire on Friday in between these 2 yellow lines. So we had a great trade on kind of the end of April that I would have already talked about. So in May, though, we started May off with winning iron condor trades. So both of these options expired worthless, I believe, and so it was full profit. Same thing happened the following week, where it expired in between the 2 yellow lines, so it was 100% profitable. The next week, when the S&P sold off due to the Trump news, the S&P sold off quite a bit, and these puts that we were short were down a decent amount, and then it kind of rallied from there, and so we ended up closing just down a little bit on this trade. So overall, it was a good week for us. I believe when you add these two options together, it was still profitable, I think, or it might have been just down maybe $50. The following week, it closed above our calls, so we took a hit on the calls, and then similar thing happened the week after that. But then last week, the market went sideways again, and it actually expired about a half a point above our puts, so both of these were 100% profitable. So the iron condors struggled a little bit because of mainly because of these two trades right here with the rally that was so strong, but it wasn't they weren't huge losses though, just ones that kind of took away from some of the gains we had already seen, and that's to be expected if you have a really strong rally like this. The iron condors can take losses. Because typically you get less premium on the calls, and so if you get a rally, it can turn the trade to not be profitable. But that's the iron condor. The covered calls is very similar to the iron condor, only it's only the calls. So we sell the call against the momentum ES position. And I won't go through all these, but we had a winning trade on this week, a winning trade the next week, a winning trade the next week, a winning trade. Actually, this week was a losing trade, so we sold them on the 24th, and they would have expired wherever Friday is, I believe over here. Yeah, right here. So we would have taken a loss on this call and also on this one. But then the following week, last week, we were profitable, and then for this week, we actually just sold the 2435s as well. So that's the covered calls. The day trade algorithms were pretty quiet, actually. I don't believe we had a lot of trades. This one here is a momentum algorithm. The morning gap algorithm. I don't think it had any trades since the last blog. The day trade short, I know, did not have a trade, and then the day trade long had a few trades, and they were basically kind of I think it was 2 losses and 2 winners, and so the total profitability was basically flat. And you can see a few of them on the 25th of May. We had a nice day trade where we went long. On the 29th, we ended up taking a loss on that trade. And then a winner on the 15th and another loss on the 9th. So I think when you add those together, the day trade algorithms were down maybe about $100. So overall, a really good 6-week period that we saw. And let me go back to the slides, and we'll just kind of close this out. Okay, so here's the trade list again for the Crusher, and we already looked at all these trades on the charts. But you'll see the PL for each trade. Here's that swing trade that we got stopped out of for about 1,000. But then here's the one that we had the really big $2,000 winner. You'll see on the 2nd of June we took a hit on the covered calls of about 741, and also on the iron condor, the call on that as well. But then that's offset some by the profit on the put. And then some of the more recent trades from the last week, where the iron condors were 100% profitable and the covered calls were as well. But I think that kind of covers everything. So just to kind of summarize again, let me go back here. The S&P Crusher, which trades 7 algorithms, has done really well this year. It's up about 26%, or about almost 8K per 30K traded. And so someone with a 120K account could trade 4 units of this, and their gains would be, the 8K times 4, so about 32,000. On a percent basis, it's about 26%. It's had 5 winning months, and June is basically break even right now. It's down about 22, but if you include the Treasury note open equity, we're actually up in June by a couple hundred. The swing trader has also done really well, and on a percent basis, it's done much better. It's up about 9,633. That's per 15K traded. And again, the swing trader trades these two algorithms, basically the swing trade ones, the ones that get in and usually will hold for 1 or 2 days. The Treasury note algorithm, though, it usually holds for 1 to 2 weeks, although lately it's been holding for 4 weeks, 5 weeks. I think this trade has been on for about 6 weeks now. But these algorithms are developed using TradeStation. We have all the data that you want to see on the website. We have the back-tested reports. What I've been showing you is the kind of live walk-forward results, meaning it's not back-tested, and it's not even really walk-forward, because the fills that we get, I take those off of my accounts so that we can show the actual fills that we get. We have auto execution brokers that will trade these for you. We'd love to answer any questions you have, but just remember that we're not commodity trading advisors, so we don't give personal advice. We're really just a software company that offers these algorithms. They can even be loaded on your personal computer with TradeStation if you prefer to go that route. I think that sums it up pretty well, though. So we're about halfway through the year, and the algorithms have really done amazing. The Crusher's up about 24%. The swing trader's up over 60% at this point, and we expect really good things moving forward. You can find the backtest reports on the website. We have statements if you'd like to see statements or more kind of live data. We can provide that. Just email us and ask us. Other than that, though, if you have any questions, feel free to give us a call. You can also email us. We'd be happy to answer any questions you have. We can also do a demo. I can walk you through the trades similar to what we did here, only go into more detail if you'd like. These are 100% mechanical trading algorithms, meaning there's no human intervention. I never override the algorithms. They just run. So they've done really well, and we're pretty proud of that at this point. So feel free to give us a call, and we'd be happy to help you out or answer any questions you have. Have a great day, and thanks a ton for watching. Bye-bye.